$563,000. That's how much extra the average person pays in retirement taxes because nobody explained this at age 35. I'm Gatsby, and I'm about to show you the one tax move that saves you over $500,000. Two people, Sarah and Mike. Same income, same contributions, same timeline. Sarah pays $587,000 in retirement taxes. Mike pays $158,000 in retirement taxes. $429,000 difference. What did Mike do that Sarah didn't? One 30-minute phone call at age 35. As a dog, I don't pay taxes. Treats just appear. But you're building a retirement fund that's 30% owned by the IRS because your advisor said max out your 401k. That advice cost Sarah $429,000. Let me show you exactly what happened. Meet Sarah. She's 30 years old, makes $75,000 per year, and wants to retire comfortably. She's responsible. She reads personal finance blogs. She listens to money podcasts. She's doing everything right. She goes to a financial advisor who sits her down with impressive charts and projections. He says, "Sarah, you're in the 22% tax bracket. Every dollar you put in your 401k saves you 22 cents in taxes. You should max it out." This sounds perfect. Sarah contributes $15,000 per year to her traditional 401k. She files her taxes, gets a $3,300 refund, and feels like a genius. Her parents are proud. Her friends are impressed. She posts on Instagram about being financially responsible. Everyone tells her she's ahead of the game. Let's follow Sarah year by year. Age 30. First contribution, $15,000. Tax savings, $3,300. Balance, $15,000. She celebrates with a nice dinner. She's in the top 10% of savers her age. Her advisor shows projections. Keep this up and you'll be a millionaire by 60. Sarah feels invincible. Age 35. Balance, $97,000. Almost $100,000. This is real money now. She lies awake at night imagining her retirement, traveling through Europe, visiting grandkids, finally having time for hobbies. The future looks bright. Age 40. 10 years of consistent saving. Balance, $218,000. She crosses $200,000. This is a milestone. She sends a screenshot to her parents. Her dad tears up a little. His daughter is going to be okay. Her advisor updates projections. $2 million by 65 is very achievable. Age 45. Life happens this year. Her son needs money for college. The roof needs replacing. Car breaks down. She has to pause her emergency fund contributions, but she never stops the 401k. That's her retirement. That's sacred. Balance, $385,000. Age 50. Balance, $578,000. She's 50. The finish line is visible. She increases to $22,000 per year. She wants to hit $2 million. She cuts back on vacations, dining out. Everything goes to the 401k. Age 55. Balance, $847,000. So close to $1 million, she can't think about anything else. Every market dip makes her anxious. Every rally makes her elated. 5 more years. Age 60. Balance, $1.24 million. She's a millionaire. She actually cries when she sees it. She could retire now, but pushes for more. 5 more years to $2 million. Age 65. Final contribution. Balance, $1.78 million. Sarah retires. She posts on Facebook, "After 35 years of disciplined saving, I'm officially retired with $1.78 million. Dreams do come true." 347 likes, 89 comments. Her advisor sends champagne. You followed the plan perfectly. Sarah believes she has $1.78 million to spend. She starts planning European vacations. She starts looking at vacation homes. She doesn't know she doesn't actually have $1.78 million. She has an IOU. The IRS owns part of it. Age 66 to 72. Sarah withdraws $65,000 per year. Taxes are annoying, about $18,000 per year, but she expected some taxes. She's living the dream. Travel, grandkids, hobbies. Her balance keeps growing. By 72, she still has $1.65 million. She thinks, I'll never run out. Then age 73 hits. Sarah gets a letter from the IRS. You are now required to take minimum distributions from your retirement account. Required minimum distributions, RMDs, federal law, not optional. The calculation, $1.65 million divided by 26.5 equals $62,264. She must withdraw this whether she needs it or not. But Sarah also gets Social Security, $36,000. Total taxable income, $98,264. Here's the trap. Federal tax, 22% bracket. State tax, 6%. Total, 28%. Taxes owed, $27,514. But it gets worse. Medicare charges her extra. IRMAA, Income-Related Monthly Adjustment Amount. Her premium jumps from $185 per month to $370 per month. For her and her spouse, $4,440 per year extra. Sarah's first-year costs, taxes, $27,514. Medicare surcharges, $4,440. Total, $31,954. She paid $31,954 to access $62,264 of her own money. That's 51% effective tax rate. Remember those $3,300 annual savings? She saved that for 35 years, $115,500 total. She just paid 28% of her lifetime savings in 1 year. And this continues forever. Over 20 years, age 73 to 93, total withdrawn $1.78 million. Taxes paid $587,000. Medicare surcharges $88,800. Total government take $675,800. Sarah spent 35 years saving. The government took 38% of it. As a dog, if someone took 38% of my treats after 35 years, I would riot. But Sarah didn't know this was coming. Her advisor showed her $1.78 million, never mentioned the $675,800 tax bill. And now it's too late. But Mike saw it coming. Mike is also 30, making $75,000. But Mike's advisor is different. This advisor understands tax brackets. The advisor says, Mike, everyone will tell you to max out your 401k, but you're 30 in the 22% bracket. That's low. What if we paid some taxes now so you don't pay much higher taxes later? Mike's confused. Isn't the point to defer taxes? The advisor explains. Most people defer from low brackets to high brackets. That's backwards. Pay low rates now, avoid high rates later. Ages 30 to 35. Mike contributes $10,000 per year to traditional 401k and $5,000 per year to Roth IRA. He pays taxes now on the Roth at 22%. His friends think he's crazy. By age 35, Mike has $75,000 in traditional 401k. Age 35, the critical decision. Mike's advisor says, convert your entire $75,000 to Roth. You'll pay $16,500 in taxes this year, but you'll never pay taxes on that money again. Mike does the math. That $75,000 will grow to $652,000 by age 70. At 28% retirement tax rate, that's $182,560 in taxes. Pay $16,500 now, or $182,560 later. Mike thinks for a week. $16,500 is their emergency fund, but $182,560 is their kid's college fund. Mike writes the check for $16,500. It hurts. His friends think he's insane, but Mike trusts the math. Ages 35 to 65. Mike continues. $10,000 per year traditional, $5,000 per year Roth. Every few years when income dips, job change, sabbatical, bad year, he converts more to Roth. Age 38. Job change, income drops. Converts $25,000 to Roth. Pays $3,000 tax at 12%. Age 42. Spouse takes time off. Converts $20,000. Pays $2,400 tax. Age 48. Bad year. Converts $30,000. Pays $6,600 tax. Total converted over 30 years, $400,000. Total taxes paid, $75,000. All at 12 to 22% rates. Age 65. Traditional 401k, $800,000. Roth IRA, $1.1 million. Total, $1.9 million. Age 73, the moment of truth. Mike's RMD, $30,000. Social Security, $36,000. Total taxable income, $66,000. Tax calculation, 12% federal, 5% state, 17% total. Taxes owed, $11,220. Medicare, standard $185 per month, no IRMAA. But here's the genius. Mike also withdraws $40,000 from Roth IRA, tax-free. Total spending, $106,000. Total taxes, $11,220. Effective rate, 10.6%. Compare to Sarah, spending $98,000, paying $31,954. Effective rate, 32.6%. Mike has $8,000 more to spend and pays $20,734 less in taxes every single year. Over 20 years, Mike's total taxes $158,400. Medicare standard rate saves $88,800. Total government take $158,400. Final score, Sarah pays government $675,800. Mike pays government $158,400. Mike saves $517,400. Mike paid $16,500 at age 35, saved $517,400 over retirement. That's a 31-to-1 return. As a dog, I understand this. Small sacrifice now, massive reward later. One less treat today, unlimited treats for life. But humans can't see it. Here's the part that makes me want to chew drywall. Sarah dies at 85 with $600,000 in her 401k. Her son inherits it. He's 50, making $150,000 in the 32% bracket. Law says he must withdraw it all within 10 years. That's $60,000 per year added to his income, pushes him to 35% bracket. Taxes on inheritance, $210,000. Sarah's son gets $390,000. IRS gets $210,000. Mike dies at 85 with $500,000 in Roth. His daughter inherits it. Same 10-year rule, but Roth withdrawals are tax-free. Taxes, $0. Mike's daughter gets all $500,000. Total family cost. Sarah's family pays government $885,800. Mike's family pays government $158,400. Difference, $727,400. $727,400 stayed in Mike's family. As a dog, I bury bones for myself, not strangers. You're burying your retirement for the IRS. The key, convert when income is low. 3 perfect windows. Window 1, early career, ages 25 to 35. You're making $50,000 to $85,000 in 12 or 22% bracket. Got an old 401k? Convert now. Example, You're 28, making $65,000, 22% bracket. Have $30,000 in old 401k. Convert $30,000, pay $6,600 tax. That $30,000 becomes $652,000 by age 70. If you don't convert, you pay 28 to 32% tax at withdrawal. That's $183,000 to $208,000 in taxes. You saved $176,000 by paying $6,600 today. That's a 27 times return. Window 2, job transitions. You quit in January, new job starts March. 2 months, zero income. That year, you only make $50,000 instead of $90,000. You drop from 22% to 12% bracket. Convert $40,000 during this low-income year. Pay 12%. That's $4,800 instead of 22 to 28% normally. Saved $4,000 to $6,400 just by timing. Window 3, retirement gap, ages 60 to 72, the most powerful. You retire at 60, Social Security starts at 70. 10 years of low income. You have $1 million in 401k, $300,000 in brokerage. Live off the brokerage. Taxable income just $30,000 to $40,000 per year. You're in 10 to 12% bracket. Convert $60,000 to $80,000 per year for 10 years. Each year pay 10 to 12% tax. Total converted, $700,000 at 12% rate. Cost, $84,000. If you don't convert, those become RMDs at 73, taxed at 25 to 30%. Cost, $175,000 to $210,000. Savings, $91,000 to $126,000. As a dog, if there's an open window to more treats, I jump through it. The age 60 to 70 gap is that window. Let me kill 3 objections. Objection 1. I can't afford the conversion tax. You spent $2,000 on vacation, $5,000 on furniture, but can't afford $2,200 tax that saves $50,000 later? You're choosing wrong priorities. Plus, convert $10,000 per year. That's $2,200 in 22% bracket. You spend more on DoorDash. Objection 2. What if tax rates drop? They won't. $36 trillion debt, Social Security going broke, Medicare going broke, rates are going up. But say I'm wrong. Say rates drop to 18%. You converted at 22%, you overpaid 4%. But you got 40 years tax-free growth. Growth beats the 4% difference. Objection 3. I'll move to no income tax state. That saves 5% state tax. You still owe 25 to 30% federal. Florida and Texas have no income tax but 1.5 to 1.8% property tax. On $500,000 house, that's $7,500 to $9,000 per year. You're not avoiding taxes, you're moving which taxes you pay. As a dog, when someone shows me more treats for less work, I do it. Here's what you do. Step 1. Check your tax bracket. Pull last year's return, find taxable income. In 12 or 22% bracket, you're in the sweet spot. Step 2. Find money to convert. Old 401k, traditional IRA, money you could roll over. Step 3. Calculate amount. Don't jump to next bracket. Make $80,000, 12% bracket ends at $94,300. You have $14,300 room. Convert $14,000, pay $1,680 tax. Lock that rate. Step 4. Call your brokerage. Fidelity, Vanguard, Schwab. Say, I want to convert $14,000 from traditional IRA to Roth IRA. Takes 10 minutes. Step 5. Pay the tax. Conversion shows as income on tax return. Adjust W-4 withholding or pay when filing. Don't take payment from IRA. Step 6. Repeat annually. Convert $10,000 to $20,000 per year in low brackets. Over 10 to 20 years, convert $100,000 to $400,000 at low rates. Tax-free forever. Right now, you're at a fork. Path 1. Do what Sarah did. Max 401k, defer all taxes, pay $675,800 to government in retirement, kids pay another $210,000, family cost $885,800. Path 2. Do what Mike did. Pay $16,500 at 35. Pay another $60,000 in conversions over 30 years. Total taxes, $158,400. Family saves $727,400. The difference was one phone call. Mike spent 30 minutes at age 35, worth $727,400 to his family. Sarah saved 30 minutes, cost her family $750,000. As a dog, I choose more treats, less effort. Roth conversions at low rates equals more money, lower taxes. Traditional 401k only equals less money, higher taxes, forced withdrawals, taxed inheritance. Obvious to me, should be obvious to you. Let me show you one more thing about Mike's strategy that most people miss: the flexibility. Sarah is locked into her RMDs. She has no control. At age 75, if she wants to take a $40,000 vacation, she has to withdraw $57,000 from her 401k to net $40,000 after the 30% tax hit. And that extra $57,000 withdrawal might push her into an even higher bracket that year. Mike wants to take a $40,000 vacation at age 75. He withdraws $40,000 from his Roth, zero tax. His taxable income stays exactly the same. He doesn't trigger higher Medicare costs. He doesn't jump brackets. He has complete control. This is what Sarah's advisor never explained. The 401k isn't just expensive because of taxes. It's expensive because it removes your control. You become a prisoner to the RMD rules. You can't adjust. You can't optimize. You're stuck. Mike has options. He's playing chess. Sarah is playing checkers. This is why the Roth conversion strategy isn't just about paying less in taxes. It's about having control when you're old and vulnerable and can't go back to work to fix mistakes. Sarah made one decision at age 30, follow standard advice. Mike made one decision at age 35, pay some taxes now. He bought himself freedom. This is why most people will watch this video, nod along, think, wow, that makes sense, and then do absolutely nothing. Because doing nothing feels safe. Writing a $16,500 check feels scary. Even though doing nothing costs you $500,000. If you're doing a Roth conversion after this, comment "I'm converting." Subscribe for more tax strategies that save six figures. I'm Gatsby. I don't pay taxes, but I understand them better than you. See you in the next one.